Good morning, traders. I'm back with a short video to update you on the technical analysis using Renko charts. This video is going to be quite small as I focus only on the most promising setups that are likely to be formed. What you have here is the Aussie dollar 30 paper Renko chart. As you can see, you've got a head and shoulders pattern that has formed right here, with the neckline support coming in at 0.732. The right shoulder has also been formed, and prices have already bounced off the neckline support. So we've got this minor trend line right here connecting the head and the right shoulder, and this is likely to act as a guide for any breakout to the upside. What we expect to see is a reversal between 744 and 735, following which we could expect a move to the downside. To the upside, in the event that the Aussie dollar breaks above 744, you could probably expect to see a further upside coming in. The downside targets, you've got a minor support sitting at 0.717, which is where you would be taking your first target, followed by a move to 0.702, where you could have your second or the extended targets. So in terms of taking a trade right now, keep an eye out on the Aussie dollar, watch for a reversal between 744 and 735, and then go short, targeting probably the neckline support at 732 and 717, with the stops coming in around 744, and then move to break even after the head and shoulders pattern has been validated by the breakout of the neckline support. A similar pattern can be seen on the Kiwi dollar as well. You've got a head and shoulders pattern that's formed right here. You're looking at the 30 pip NZDUSD chart right here. We again notice a bounce of the head and shoulders neckline support, and you can see right now the prices are interacting with the falling trend line. So if you see a move towards 711, then probably the head and shoulders pattern could be at risk. In terms of the price targets to the downside, we're looking at a move right here to the support level of 681 and 684. Considering that price has already been broken out from this particular level, which was acting as a resistance previously, it only makes obvious sense for prices to fall back to 684 to establish support. So keep an eye out on the Kiwi dollar, where there is a strong potential for a move to the downside. But at the same time, you can expect to see a bit of a move maybe towards 7137. You could expect a move towards 714 and 711. So look for short opportunities right here, with probably stops coming in at the highs of 71577 or 7158, targeting the neckline support at 699 and 684. On the gold chart, what you see here is a potential rising wedge pattern that's being formed, although it's not yet validated, because notice the two trend lines that I've plotted here. So even if prices attempt to fall back to the 1300 level, it would still be a valid rising wedge and still points to the upside. For the moment though, gold prices are likely to decline towards the 1300 level, so watch for a reversal here for a move to the upside, provided you have a breakout above 1330. The minimum target I'm looking at is 1350 again. So for those of you who think that the current rally that you see in the markets potentially signals the end of the Brexit volatility, you would be mistaken for this, as I suspect we could see another new bout of selling coming into the markets. The dollar yen is another interesting chart to look at. As you can see, prices have been steadily falling in a downtrend and interacting with the middle of the channel. Right now what you have is a divergence. You've got a hidden divergence right here with these stochastics making a higher high while prices are making a lower low. In terms of support, you could expect a move towards 103.8. to 103.2. The chart that you're looking at is a 60 pip USDJPY fixed Renko box. So guys, here is your resistance level and you've got your support sitting at 100.2. So watch for maybe a minor double top pattern forming right here and then fade the rally towards 100.2. Also note that you have a potential head and shoulders pattern that's forming right here. It's not yet confirmed. You've got the left shoulder and you've got the head formed in here. So it all depends on prices falling back to 100.2 and if this particular level could hold. If USDJPY does manage to hold out at 100.2, then expect another minor move to the upside, which would then form the right shoulder, following which you could expect a strong decline to the downside, which gives you a target to 97.2 as the final target, and probably 98.35. So the ideal level to short USDJPY from would be somewhere around 103.2, with your stops maybe initially put at 104.831. The EURGBP, as you can see, prices are moving within this triangle pattern. A bearish reversal right here could signal a move towards 0.81, following which you could probably see a renewed move to the upside. At the same time, in the event prices break below 0.81, you could expect that the next leg of decline push the EURGBP towards 0.768 and 0.762. So guys, this basically wraps up the quick summary of the markets today. The outlook is valid for a couple of days, and good luck with the trading.